Yo guys, what up? It's November 10th and I'm going to go over my take on Draftkings, the stock, earnings last week on Friday, and my interpretation of those earnings, okay? Before we get started, of course, please hit that like button. If you get anything, any value out of this, I would definitely appreciate a like in return. Thank you very much for that. Also, hit subscribe if you want to get notifications on any new videos that come up from my channel, okay? It's a very young channel. I appreciate your help as always. Okay, guys, let's get on with it. So I want to go over DraftKings, of course, but for those that don't know Draftkings, this is a mobile sports gambling app which has daily fantasy, sportsbook, which is kind of like betting on games, the spreads, everything like that, the parlays, casino, which is kind of like your online poker and casino type of games over mobile, and marketplace, which is the non-fungible token, NFT marketplace. If you don't know what an NFT, just go ahead and Google it, and in 2 seconds you'll be confused. All right. So one thing that I noticed that's funny when I open this website to show you guys is the website kind of puts it in your face what the problem is with this sector of the economy, which is the mobile sports betting economy, which is customer acquisition costs. See here, get a deposit bonus up to $500 for our daily fantasy. For Sportsbook, what are they saying here for Sportsbooks? Let's see. Bet online with DraftKings Sportsbook. Get a bonus up to $1,000. That's customer acquisition, guys. Casino. Let's see what it says here for casino. Let's go, computer. Get a $100 match up to $2,000 on your first deposit. Crazy. And marketplace, I don't think that has anything. Thank God. Yeah, I was thinking it was going to be like buy one NFT, get two free or something. But no, that's not the case. So good. So again, guys, customer acquisition, that's a big thing here. There's a big battle going on between these players at the moment. And so you have DraftKings, you have FanDuel, you have Skills, you have WinBet, MGM Bet. These guys are all fighting for customers. They're in a pricing war at the moment in which they're trying to get more people from other apps or people that have not come to the app and try to entice them to come to this app versus all the other apps that are out there. So it's a bad war, right? It's going to get dirty, and there's going to be winners, there's going to be losers. I am banking on DraftKings to be one of the big winners because they have a very clean balance sheet, great management, the technology that's needed to execute in this space, and I think will be rewarded in the long term, okay? So let's move on here to the earnings press release here and what they said in their press release. So the press releases, and this is a good example for that, usually highlight the best information that's out there for the company, essentially the highlights of what they did, but it doesn't say this was bad and this was bad. They try to leave that to the side. I don't think they should do that. I think they should just kind of just tell it all in the earnings press release, but it's usually never the case, okay? But when it comes to the highlights here, they're talking about growth in users, okay? And this is very evident because they've had new states come on board, but new states come with new costs of hiring employees, new customer acquisition costs, as you guys saw from the website, okay? But it starts here, monthly unique users or monthly unique payers, MUPs, which are up 31% compared to the third quarter of 2020. That's a positive number. On average, 1.3 million unique paying customers engaged with DraftKings during each month of the third quarter. The increase reflects strong unique player retention and acquisition. Okay, this here is key. That costs money, and I'll show you guys later when I go over the financials of the company. Also, average revenue per monthly unique payer, ARMUP, was $47 in the third quarter, representing a 38% increase versus the same period last year. Also, another positive number. It says here they deliver strong growth in MUPs and RMUPs in the third quarter without contribution from major sports such as the NBA, NHL, which resumed their respective seasons in the third quarter of 2020 following suspensions in March due to COVID-19, due to the Rona. They then move over to the guidance, which we'll talk about the guidance a little bit here when we go over the earnings numbers, and expanded mobile sports betting with iGaming footprint. That's all good, okay? But that's it for the earnings presentation, essentially, okay? Let's go over the numbers real quick. So you guys already know EPS Revenue Guidance. This is how the numbers are reported for the quarter, earnings per share, revenue, and forward guidance. So the when you see these numbers here in parentheses, it means that they are lost numbers. It means they're negative numbers, not positive numbers. So they reported $1.35 loss per share on the quarter versus the street's expectations of a loss of 91 cents. So this is a bad miss, right? This is about a 40-cent miss there that they're not going to get back this quarter. So not good, okay? There's also revenues, 213 mil versus higher expectation from Wall Street at 237 million. Bad misses here, okay? Now, when it comes to guidance, they kind of have a mixed bag here. I think they're leaning towards a beat because they introduced full year 2022 guidance for a lot higher than 126, which is now the new midpoint for guidance in 2021. This midpoint was slightly raised, so I don't think it's this big hoorah for 2021. But 2022 is looking more promising. The problem here is are we going to be profitable in 2022? I think the answer is still no. I think this company's still a couple years away from profitability, and we'll see that maybe 2023, 2024, when the stock, I think, will command a much higher valuation. Then now moving on to the actual earnings presentation on their investor relations site. They're talking here about their highlights. Okay, we already went a couple of these highlights, but of course, launches in Arizona, Wyoming, and Connecticut. That's a positive. Leading product, marketplace, we already talked about that. Here, they're talking about the launch of the Arizona mobile sports betting app, or their launch there in Arizona, okay? And of course, they're saying this is a very successful launch, 3 times more successful than any other launch in our history. So of course, this is good. I think they have about 100,000 subscribers, and this was on the conference call in the first in the first 17 days, 100,000 subscribers, when in New Jersey it took them 170 days to get 100,000 subscribers on their app. So I think this is good, and it's leaning towards a positive growth, specifically when it talks about openings or new states opening. Here we move on to their kind of new offerings on their app, which are a couple games here. And one of these games is kind of weird, which is the Rocket game on the Draftkings app. And this this is funny because this resembles the stock market. And I think this is what this is DraftKings' answer to the kind of new type of investor crowd which wants to invest in stocks by looking at a chart and not much else. Okay? Which is not me. It's not what my channel is about whatsoever. But it's called the Rocket game, in which this rocket... hold on one second, guys. This rocket, I was going to highlight it here for you guys. This rocket goes up, and at some point, it's going to go down. At some point, it's going to go down. Are you going to get out before the rocket goes down and crashes on you? I think that's pretty funny, and it's a way to make money. I support it as a DraftKings investor and stockholder. Okay, the NFL Flash Bet, that makes a lot more sense for me as a DraftKings type game, as these kind of very quick bets against specific teams. Very, very fine with that one, more than the Rocket game, okay? Now, moving on from that, the NFT marketplace, I think that's a very smart idea with their sports NFTs. I think NFTs are sort of silly, but they make a lot of sense for sports. I can see somebody, instead of buying an NFT of a rock or an NFT of a monkey or a lion, wanting to buy a Tom Brady NFT or a Rob Gronkowski NFT. I'm not saying that you should buy those two players. Don't buy those two players. Buy players from other teams, okay? Not those two guys. So here, moving on, they're talking about market share overall. I don't put a lot of kind of thought on these kind of graphs about market share. I just kind of let it happen naturally through their revenue and earnings kind of increase. Here they're going over their Q3 2021 revenue and kind of going over some weird graphics here on organic outperformance, which this is what we would have done if it wasn't for the predictability of the NFL season. New state launches are costing us this much, and lower than forecast hold percentage. Let's go over that real quick. So when we talk about lower betting hold percentages, this is a very important part of DraftKings, which I go to this article here that I found, which is November 5th of this year. It says sometimes results go against us. So when you run a casino, when you run a sports mobile betting app, sometimes games are not going to go the way of the book the bookkeeper or the bookie, let's call it, right? There's gonna have some games that are very, very predictable, in which the spreads are not going to go as high, or they're going to go high, which goes against you as a bookkeep. Whatever. What I want you guys to understand here is essentially, it says here, as has been widely publicized, NFL outcomes have been very favorable to players this year for a number of reasons. According to Robin, 71% of favorites and 57% of overbets won for NFL primetime games through week 7 of the NFL season. So this is telling us these casinos, sports books, they need some sort of unpredictability to these games to make more money. And I completely agree, because I follow the NFL, and these games have been very predictable. Maybe not this Broncos and Cowboys game that just happened, with everybody thought the Cowboys were going to run over the Broncos, and it ended up being the other way around. That's the kind of unpredictability that these sports books need, like the Broncos and the Cowboys game. Go watch that game if you didn't see it. So again, guys, so the issues here being unpredictability of the NFL season prevents higher revenues and higher earnings. We need more unpredictability from the NFL season, because that is the bread and butter of DraftKings, coupled with higher customer acquisition costs that are crippling the revenues and earnings from becoming more positive. So that's the problems that we're facing here as a DraftKings shareholder. But the positive side is this, like I said, this is still a healthy company. If I bring you guys here to the balance sheet, we're going to see here that on the asset side, we're looking at cash equivalents and cash reserve for users. This is something that adds up together here to about $2.9 billion. And that is a healthy amount of cash for a company to hold when it virtually has no real debt. Okay, these are kind of like, some minor liabilities, nothing major here, other than accounts payable and liability to users, which is kind of the money that they're reserving to pay users when they lose a bet, or when the users win a bet, rather. Okay, so nothing in the way of real long-term debt here on the balance sheet. So this is, of course, a grade A balance sheet, which keeps the company healthy, and it keeps company flexible when unpredictability strikes, sort of like it has in Q3. Here, when we look at their income statement, we're going to see cost of revenue, sales and marketing. Look at these costs, guys. On a 3-month period, they go, sales and marketing increases a clear $100 million. And here, a very, very high increase on cost of revenue. Look at a 9-month ended number, 187 to 540 on the cost of revenue. And sales and marketing over doubling in a 9-month span to $700 million. So this proves how expensive it is to retain a DraftKings mobile player. And hopefully this cost starts to go down as more states are added to the list. Remember, we only have 15. There's still 35 other states out there that we can actually get money from, hopefully in the future, through legislation. So to close it out, guys, the conference call details that I want to go over is, of course, the 60% year-over-year growth. That's right, but it's not the whole story, just like we talked about. Lower sports betting holds affected the revenues, and EBITDA, that's earnings before interest, tax, depreciation, and amortization, negatively. We talked over that. On top of betting holds, cost of new launches in states, okay, 2 new states in Q3, they negatively affected revenues and EBITDA, okay. NFT marketplace is running well, that's true. Golden Nugget acquisition comes, or the close of that acquisition comes in early 2022. This will bring about 10,000 new players into our circle, into our business as shareholders. So this is a very positive acquisition, in my opinion, okay. The Arizona launch was the most successful launch to date. That's positive. The mobile gambling legislation is moving forward nicely. Okay, there's 25 states that have introduced new legislation, and only 15 states have DraftKings Live working at the moment. The growth path is visible and tangible, but they are saying it takes 2 to 3 years for a state to become profitable after launch. This is because of the cost of new employees, so they can answer phone calls and customer service phone calls, new staff to account for that state and its regulations, also taxes and all kinds of things like that that they have to account for, okay? So let's close it out with a chart of DraftKings, and we can see here on a year-to-date basis, put on a 1-year basis here, we're pretty much almost in the red. On a year-to-date basis, we're in the red. On a 1 year, we're barely in the green. I hold about 125 shares at about $37 a share cost basis for DraftKings. I am more than fine being patient and waiting for an opportunity to add under $35 a share under the current conditions that they reported. Even though I think this is kind of like a temporary blip due to the issues we talked about. Essentially, I'm not going to go over those again because I've already gone over like three times. Okay, guys. I also want you to consider that the valuation of the stock being at about $16-17 billion trades at about 15 times sales. There's no PE, price to earnings ratio, because there are no earnings. The earnings are negative, so you won't get that price to earnings ratio. So you must trade on a price to sales ratio, which I don't like anything really over a 10. But I think that given that this company is slated to grow 100% this year and still close to 50% in 2022, and I think they'll do better than this in 2022, I think that the stock is a good buy under $37 a share to start a position, and more as it gets lower. All right, guys? So I've gone a lot farther than I wanted to, but I want to give you guys the info. I want to give you guys my take and everything you need. Again, let me know if you guys want the link to the Stock Gladiator Discord to join us there, talk about this. We got guys picking up shares of DraftKings in the Discord. Ask them, ask me. Thanks a lot for listening. If you made it this far, peace out.